This is Rovin Remax. Remax Crossroads First Realty 3. I'm Linda Montgomery, and I'm roving around North Texas, highlighting all the people, places, and things that make this a great place to live and invest in real estate. Our guest today, joining us in just a few minutes, is Scott Drescher with Highlands Residential Mortgage. Hello, Scott. Thank you for joining us.
Hi, Linda. So good to see you again today.
You as well. Today we're going to talk about what is a good credit score. Tell us a little bit from your perspective. What do you consider a good credit score?
So when we talk about credit scores, people know that credit scores go as low as the 300s and they go as high as the 800s. But what's more important is, what do people really need in order to get a mortgage? Mm-hmm. So the simple answer is that you can start with anything as low as the 500s, the high 500s, but most lenders won't lend below 620. Many, including a few big banks I won't mention by name, won't even go below 640. Uh-huh. And so it's important to know that what you call the score and what you call the range is going to depend on the usage. So first thing that's important to know is a mortgage credit score is different from a consumer credit score. So what you see online is not what you're going to get from a lender.
Well, that's a very good distinction.
Yeah, very different analytics. As a matter of fact, I've heard, and I don't know this for a fact, that there could be as many as 65 or 75 different FICO scores that you could get. And each FICO score is different depending on which bureau, Equifax, Experian, or TransUnion, from which they pull the data. And so you can end up with all different kinds of scores. The important thing is when you get a mortgage credit score, it should be pretty much the same between companies, not too much variation. Mm-hmm. And your consumers want to think that if they're going to do minimal down payment or if they're going to want a good interest rate, then they really need to be above 620. And conforming loans, which would be agency loans sold to Fannie Mae or Freddie Mac, the ones that are not government, mm-hmm. those will not go below 620. They will never buy a loan that's below 620. On the upper end, anything above 740 is considered perfect, and you get the very best in rate and costs if your mortgage credit score is above 740.
I was going to say, you use that score then to help you select the product that's best for the client, right?
A little bit on the product side, mm-hmm. certainly, but also it dictates what somebody's going to get for rate and costs. So just as an example, when you're looking at a conforming loan, that would be, again, sold to Fannie Mae or Freddie Mac, not government. And you're going to put, say, 5% down. If your credit score is above 740, as I mentioned before, you're going to get the very best in rate and fees. Mm-hmm. If you go to 739, it's a tiny bit worse, all the way down to 720. They go in 20-point tranches to decide how much more you're going to pay. Okay. And so it's 720 to 739. 700 to 719, 680 to 699. You see what I'm saying?
Yes, I do.
All the way
yes,
down to 620. Uh-huh. And that doesn't mean you're going to be guaranteed to get an approval just because you have to pay more. That might also be too low a score to even get approved. Because mm-hmm. Fannie Mae and Freddie Mac don't automatically say, hey, look, if you've got a good enough score, you get a loan, mm-hmm. because everything else has to go into that too. So if you're somebody who has a decent but not good score, decent enough score, and you have a high debt ratio because you have too much debt, and you have very little down payment, and you're spending every penny you have to buy the house so that you have no money left over after closing. We call those reserves. If all those things get packaged together, then the automated underwriting system that Fannie Mae uses may spit out no instead of yes, even though your credit score might be high enough.
So you have to spend some time counseling with the client then for not only their scores, but the product and what they can be satisfied with. Is that correct?
Absolutely right.
Very good. Well, thank you so much for that information. Very, very enlightening. Of course, you need to speak to your own real estate professional and mortgage professional for advice. Thank you so much for being with us.
And thank you.